banks are friends? Yes or no? Do you think banks are your friends? We got some no's. Okay. Okay. We got some no's. Banks aren't your friends. Whether you're in the United States or elsewhere in the world, banks are not our friends. Since we're on the same page, you guys are saying no. And if you said yes, it's okay to disagree, but the majority of everyone here is saying no, they're not our friends. So that being true, all of your money is flowing into someone else's banks. We talk about how the importance of paying ourselves first, right? Following the commandments, 1, 2, 3, as I'll review later. But right now, your money flows away from you. It comes to you and it flows away. It is the motion of money. And we are groomed to put our money in the banks. We make deposits or have automatic deposits made into someone else's bank, someone else's family. And those families have really nice real estate, don't they? Typically, think of the nicest building in your town, in your city, and what is it? Well, it's the bank. And so today we're going to talk about a little bit more about the problem, and then we're going to address different ways to fix that at a you and me level, at a you and me fundamentally grassroots movement level. Again, it's just shifting that one thing that we talk about every single week and really moving that one thing to completely changing everything for your family's future and the financial legacy that you each are intending to make. Because I know what you guys want. You all want the same thing. We all do. As humans, we want more connection. We want more time freedom. We want more financial freedom. We want that feeling that we get when we're with our loved ones in a moment and we're present and we're not overwhelmed by everything else. We want that feeling we had as little kids, maybe the first time you rode a bicycle. Think of the thing that made you feel most free growing up. That is what we're all after, is that feeling. So we're looking to find that feeling. It's available right now, but let's talk about why in America, why in Canada, why in most countries, we're not there. And it's because, again, why? The banks are not our friends. So most of your money is flowing through someone else's bank. You're working hard. That income is deposited into someone else's bank. And when you deposit the money in the bank, is that an asset or a liability to the bank? Pop it in the chat, asset or liability. You guys are right. You guys, I know you're thinking this, but it is a liability. So what do the banks do? We've seen this before. They have to move the money back out. They go loan it to somebody else and the money comes back in, they loan it out again. It's fractional banking. When we're looking at this, like some of you have already started the bank of mom and dad or your privatized banking system or whatever you're naming your privatized system, that's reclaiming the power of the banking function in your life. And that's exactly what we're looking to do. We're looking to see what the reality is today, what the next steps to shift the current reality just by 180 degrees, and you taking back control of that money. You feeling confident again, powerful, strong. Like as fathers, our jobs are to provide, to protect, and if we do those well, we get to procreate. Or we just have to go create more, right? Create communities of like-minded people, like the folks here. You guys are already doing what most people won't do by learning and investing in yourself. And so let's talk about this. Pop in the chat. Right now, we're in one of the greatest financial messes we've ever seen on the planet. And it's largely due to the central banking system, our financial system, the government, Wall Street. That's where the booms and busts come from. That's where inflation comes from. It happened. This is why we had the fall of Rome, thousands of years ago, is because of what's happening today. And I guess we're human. We are sinners. We don't learn from our mistakes, but we're repeating the same thing by printing money, by the government just saying, oh, there's a problem, print money, flow it in. And that's why we're all paying the taxes of inflation. For the major expenses of life, what are some of the things that are the major expenses in your life during your lifetime? I want to hear it from you. So you guys pop in the chat. Name some of the things that are the biggest or most significant costs that you faced or expect to face in the upcoming years. House, children. Yeah, children definitely aren't cheap, Dennis. What else? Housing, health. Perfect. Health is our wealth, housing payment, college education. Yeah, so we're focused on our kids, food. Yep, food. How about cars, vacations, weddings, retirement, taking care of our family as they get older? These are all the big life expenses. And how do we finance them right now? We finance them right now by how? By putting our money in the bank, someone else's bank, and then when we need it, we go borrow it back out in the forms of a loan, in forms of a credit card, in forms of something where we're paying interest back to the bank. So they take our money, make all kinds of money on our money, and then what? And then we borrow our money back from them at a rate? Like as soon as we hand our money to the bank, it is no longer our money. Contractually, we have given up the control of our money. It's right there. We just don't understand that functionally. So what if we can shift that by changing just one thing? Remember, we're going to get to the solution here, but first we got to keep looking at what the problem is. You buy a house and what happens? You're taking on a mortgage. Your education for your kids. That's a big one. $1.3 trillion in debt. It is the government's biggest asset. Is that not crazy? That seems a little crazy to me, not to you. I know it does, but making a point here. Our cars, our retirement, our medical bills, funeral expenses, lifestyle choices, and the list goes on and on and on. And every one of those situations, who's in control? Who's in control? Is it us or someone else? If we're not practicing the system of the you and me banking level of privatized banking, right, the infinite banking concept, then the banks, whether it's your local credit union, the big banks, wherever you're banking, the banks are in control of your money, okay? And again, you're doing all the work. You're earning all the income, but someone else is getting all the money. Every time you're swiping a debit card, paying a bill, making a mortgage payment, you're permanently giving up the opportunity to use that money ever again. That money meaning the opportunity cost. Your money will never earn you money again once you've spent it. And when it's gone forever. Think about this. I want you guys I can think of in the last 10 years, I've had millions, at least $1.5 million or more, maybe a couple $1 million flow through my fingertips and poof, gone forever until we started practicing what I'm teaching you today and implementing this in our family. That money would just come in and go back out, and we would go in and out of debt. We'd go up and down, right? We'd be out of debt. Something would break down. We have, a transmission on a vehicle would go, an air conditioner, a new house would go, something would happen with health, and all of a sudden you're back in debt again, right? Now, you guys have been there. If anybody can resonate with that feeling of the kind of the ebbs and flows, almost like the stock market in your financial life, give me an eye. Give me an eye in the chat. Anybody? Yeah, I, Frank. Okay, we got some honesty. Anybody else? Anybody else familiar with that ebb and flow of the finances and just feeling like you're just not able to get ahead? Because your income is doing what? It's flowing through someone else's bank. But here's the reality. By changing the one thing, where does your surplus money go? Where does your savings, where goes the money, the lazy money go first? You can take back control and take on the banking function in your life. So instead of relying on external banks, you become the bank. You become the banker, the borrower, the depositor, and the bank owner. You become all four characters in your play of your financial life. Again, let's go through those. And you guys, awesome eyes in the chat. I see you interacting. I love it. You're the bank owner. You're already a lot of things. All of you here, I know that you're, either siblings or parents or sons and daughters, right? We're lots of things, lots of people. You're business owners, you're entrepreneurs, everyone that's watching. But you can be four other of the major characters in every financial play. If we think about this as a game, you can be the bank owner, the banker, the verb of banking, the borrower. So you're on both sides of the equation. When you look in the mirror, you say, hey, how much am I going to pay myself back? You decide, and you better do it in a fair way, which I'm going to cover later in this. And the depositor. You are now making the deposit, right? Your surplus money into the bank that you own. What are you guys going to name? What are you guys going to name your banks? I want to hear some. And Travis, what would you name your bank? my friend. You have good names for lots of things, building stuff in your dinner table dads community. So what would you guys name your banks? You know, we got the Bank of Sipple down here in Florida. We've got 4 branch offices, our bank on, Main Street, 3rd Street, 5th Street, maybe 7th Street. Value Creation Bank. I like that. The Me Bank, says Anthony. The Bank of Dad, says Frank. I love that. That's awesome. And Frank, you've got your banking system going now. Took a little while, but we got there, right? We got there because we can find solutions by being creative and being creators. And so capitalizing, we're going to talk about when we take back control of the banking function in our life, what does that look like? What are some of the ways that we can capitalize our system? Because this is one of the biggest things that come up in my 3,000 plus conversations. Jason, okay, I see the power in this. I want to do this and I'm ready. And I say the question for all of you, well, how much are you saving or paying yourself this month, in this moment, right now? And a lot of people, there's nothing wrong with this. This is just what happens when we follow someone else's rule book and we don't know what the rules are, right? But their answer is goose egg. And then I ask, okay, well, if you're saving 0, are you potentially putting money into some kind of retirement plan, some kind of ESOP, like a employee stock plan? Are you putting something into a qualified plan? And a lot of times people are like, yeah, I'm putting up to the match, or I'm putting X amount in because I work for Tesla. These are real conversations I've had this week. And what I find is in the explanation is, okay, that's amazing. So you are saving, but you're just saving for your future self. What about yourself right now? Why are we treating ourselves today? Because there's always 2 of us in every conversation. Like everyone here, just multiply the number of people here by 2, because there's 2. There's us presently and there's our future self, and we exist simultaneously. So how do we love both sides equally? A lot of times, because of the rules, like here's one of the things I was going to share from earlier today from a great leader that came in and spoke with us, is we have to refer to our values as the basis for all of our decisions and actions. And this is whether it's in business or with our family. And that was a new one to me. So whether it's business or family, we have to refer to our values as the basis for our decisions. And so when we start looking at the values, think of the first 2 commandments. Number 1 is what? To love God with all of our hearts, our minds, and our souls. Number 2 is to love thy neighbor like thyself. So let's look at the numerical outline of how that is set up in the Bible, right? 1 is God, 2 is self, 3 is the neighbor. What we're doing if we have no savings and we're not paying ourselves is just, we're going 1, 3, 2. And so there needs to be a little bit more love for ourselves, a little bit more. We got bankrupt, says Edward. That's true. We got to have a little bit more love to ourselves. We have to pay ourselves persistently, consistently, and we have to get there slowly. If you're not there today, what we look for is how can we capitalize over time? Where is there maybe financial leakage in how your life is being run right now? Where are you overpaying some debts? Where are you spending more than you need to right now just because it's easier? But once you align your values, what you want to give to your family, what you want to give to your community, then you can start making decisions on how can I build the bank of mom and dad? How can I build my own privatized banking system or my value creation bank for my family and generations to come? And so one of the easiest ways to do it is to do it consistently over time, whether that's monthly, quarterly, annually, but to do it consistently. The second way is if you have had the discipline of saving, you've picked discipline over regret, but you've been maybe parking that money in a bank where it's earning you maybe a high interest rate of 4% or 4.5% or whatever it might be, but it's taxable, right? It's taxable and it's not guaranteed and it does nothing for the future family. So what if you move that money that I would call lazy money, sitting where it's not protected in the bank, and put it into your own system where it's instantly giving you a guaranteed protection for your legacy? It's instantly giving you a guaranteed growth. It's instantly tax-free growth, right? Guaranteed contractually with you in charge of it. That's where the banks have their money, $202 billion. Google Boley, right? Everything I'm telling you guys, please check on this. I just want to be an educator and someone that's in service of you and your mission and your goals. And so the second way to fund your banking system, remember, one is just capitalize consistently, monthly payments, paying yourself first, paying yourself like the wealthy, the 10%. Number two is funding it with larger sums up front, putting more in there, moving the money from where it is today and putting it someplace more optimal to be able to leverage it for all the things that you're going to use it for. The third way, if you're a business owner, this is a great one. This one came up in a training the other day. I'm only going to stay here for a second, but this is something that I did, and I have a video about this last year where I had money just sitting in my savings, ready to pay our payroll taxes at the end of the year, ready to pay our tax burden of running a business. And the money was just sitting there for months and months and months. And when I had to write Uncle Sam a check for $20,000 last December, and it just went straight out, didn't go through my banking system, just straight to Uncle Sam, I thought, man, I really messed that one up. And I prayed on it and I was distraught about it. And I was probably a little bit of a jerk around home, to be honest. I was probably a little short, a little angry, because I don't want to give Uncle Sam my money unless it's making me money first. I'm all good with supporting our great country and what I have to pay in taxes, but I don't want to pay a dollar more. And when I stroked that check for 20 grand and sent it out, I thought, how could I have done this more optimally? And this is what a lot of business owners have an opportunity to do. If you have large sums of capital sitting in your business, you can build, or we can build you a corporate owned life insurance where the money stays in the business. It's set up that it flows in and out of your banking system, but it never leaves the business. Or you can even take policy loans and make loans to your business. This is something my partner Chris Noggle does all the time. And you have the added liquidity that your business needs by having it in your banking system. So this is a third way that you can capitalize. And then redirecting your debt payments. I went over this a little bit earlier, but it's turning those liabilities into assets. How can you take back control of one or two payments? I was talking to someone earlier today, $11,000 in debt. It was a $586 a month payment, right? On a credit card at 29.99%. If I told all of you, give me an eye if you guys be excited. If I said, you know what? I've got a 29.99% guaranteed investment you can make today. Would you guys do it? Give me a yes if you would do it. I would say that you're all going to say yes. You're like, where is it? Oh, or you might be like, whoa, that sounds awesome. I need to know more. Show me the contract. Am I in first lien? Am I like Ricky Bobby's dad? You ain't first. You're what? You're last. So where am I in that pecking order of importance when I get the money for 29.99%? I'm like, you're paying it to Citi. You're paying it to Bank of America today. If you get to the point where you've capitalized your system, you've paid off that debt, and now you're recapturing all that money to yourself month after month after month. Because remember, you're not going to change anything. All of a sudden, that 586 that you freed up, that doesn't all of a sudden just go be, hey, we're going to go on dates now, honey. We're going to go do this. We can go get that stuff you want to buy. We can go make this home improvement. No, that money goes back into your system to either repay the loan or to pay off the next debt. So it's just having that cycle of money. Remember, money in motion makes more money. So this is the fourth way. We're capturing this. We're turning it into an asset, and it continues to grow our legacy. And that way, that redirected money starts building up as we're making and capitalizing the system. You guys see how simple this is? Your heads might be spinning a little bit, but just give yourself permission. You don't know it yet, but you're going to. You're going to give yourself permission. And then you're maximizing the tax advantages of this because you have tax-free growth, tax-free loans, tax-free distribution. And that way, maybe you have taxable investment accounts. Maybe you're 59 and a half and you have a lot of money wrapped up in a 401. And I'm not a financial advisor, so I'm not saying this, but it's to ask yourself the question, what am I making in my qualified plan that I am going to pay Uncle Sam at some point? And how can I redirect maybe the money that's been put in there every month into a system where I know what the taxable liability is today, I know what the taxes are today. Who knows what's going to be after November, right? We might see a huge shift, even though they're not going to really raise taxes a lot on most of us. They're just going to throw a wider net. And as we go more and more in debt, taxes up or down the future, right? So these are all things I need you all to think about. Are the banks our friends? No, definitely not. Definitely not your friend. And that's why they give us dumb, dumb suckers. That's one of the best things I've heard come from some of the other presentations of my peers. But you get that sucker. I don't know which one's your favorite. I like the root beer one. They don't have it very often. My son likes the blueberry one. He likes to turn his tongue blue and stick it out as look dead, right? So, and I'm like, what did you do to your tongue? So anyhow, we give them all our money. They make 400 to 1,300% on every dollar we deposit there annually, right? You can look that up in BauerFinancial.com. And what? They give us next to nothing back. Why not take the banking back to the you and me level? So let's look at some strategy here. Let's look at how we're using policy loans. Let's look at how we're using our own money, right? We don't want to treat the money that we put in our banking system worse than we would treat. This is just kind of a warning because I hear this a lot as well. I'm just addressing questions I hear in my calls. Once it's grown enough value, once we start taking policy loans, and policy loans have been around since 1848. Why? Because our human money problems and our money mindset hasn't shifted all that much in the last, I don't know, what's that, 170 some years, 180 years, almost 170 years, right? Since the 1840s. It hasn't shifted that much, but the insurance companies understand the gift, the blessing that they're giving. So they say, hey, I don't want someone to lose that legacy piece, that guaranteed tax-free payout when we shuffle off. Because like, guess what? 98% of you guys aren't going to make it out of this alive. Think about that. Just kidding. All of us, as far as I know, just trying to make sure you're still there. So we want to be able to have a system to pay ourselves back, to pay our own banking system back, because our banking system is our friend. And so we're going to look at some of the strategies involved in this. If we start early, fund aggressively, like I'm looking at my son's policy, by the time he's in his 60s, we'll have put maybe $300,000, $400,000 into, and it's going to have over $1 million in cash value. The power of uninterrupted compounding is insane. So if we start them before our kids are even in the game, when they're dependents, then we're setting them up and teaching them for a legacy. It's like passing on our values in our family. It's no different. And then again, you got to find that right balance. You got to find the balance in that you know that you can consistently make the premium deposits, but then you have the stretch goal of putting in more cash value. You have to look at what is going to be specially engineered just for you. And this is why we have one-on-one conversations with you, because we have to look first solving the problem. We identify the banks are not our friends, and that we want to take banking back to the what? To the you and me level. To the you and me level, so we can go out there, and that's from Nelson Nash. We can figure out, okay, how do we solve this? How do we think long term? And I'm going to go through some of the principles to really cement this home for you of Nelson Nash and what he taught me and what he is teaching the world. Because this isn't about, man, this is about a process. This is about the mission, the values, the story that we're telling and that we're telling ourselves and our family. And so when we look at this, we want to start early. The more time your money has to grow, consistent funding, right? Consistent, persistent. And that's going to make that regular contribution grow. And we're thinking long term. It's a long-term perspective. It's not a sprint, it's a marathon. Or I like to say, I don't even do a marathon until I swim 2.4 miles and ride 112 miles. But infinite banking is a financial system that's a lifelong commitment and a process that you can teach to future generations, and they can teach to future generations. And this is how the richest families have been doing it forever. The Rockefellers, right? They have, I think 150 Rockefellers are living off of what has been set up over the decades. And a big piece of it, the foundation, is whole life insurance policies that are cash rich. So here's the 5 principles I was talking about. These are the value-based decisions that I mentioned earlier that I heard and I loved in terms of how do we pass this on to our family? Not only the financial literacy, the financial freedom, this foundation that's a gift, but then it's based in values. It's based in sound principles that are irrefutable. Number one is think long term. We're talking 40 plus years out, right? We want to think like we're never going to die and then live today as if today is our last day. That's the best way that we could live life. Think as if we're never going to die. Plan that your future is always bigger than your past. That's another Dan Sullivan quote, right? We always want to, as long as our future is bigger than our past, we'll always be elevated to go learn new things, to build new communities, and to do bigger things for those around us. We can serve in faith and love at a much higher level when we think long term. Because right now, in the moment, we want to be present as if we're not going to be here. Like we got the hurricane going on. We were all laying out in the yard 30 minutes ago, letting the wind blow us. And I had hurricane hair when I came in. It was standing straight up and I almost came on like that just to be funny. But my ego got in the way and I combed my hair. So you guys missed that. Number two is we want to capitalize the system. That's going back to the 1, 2, 3 of the commandments. We got to pay ourselves first. That should be 10% of whatever you're earning. You make 50,000 a year, that's 5,000 a year. Break that down monthly. Start paying yourself. Break it down daily. Break it down to maybe you're buying one less Starbucks. 100,000, that's 10,000 a year, right? 200,000, 20,000. 10% comes straight from The Richest Man in Babylon and many other books about being financially rich. The rich families, the wealthiest families, they keep their wealth because they're honoring themselves and loving themselves before they're able to go out and help others. Number three is to be an honest banker. Don't steal the peas. When you build this system, when you build the bank of mom and dad, the value creation bank, or whatever you've named your bank, right? It's about you and your banking system, whatever you want to call your banking system. Once you name it, once you take out a policy loan to a tax-free policy loan, you want to set up a system to pay it back. You want to either pay that back in a way where it's system that's structured, where you're paying it back monthly, or you're lump summing amounts of money in there when you want to, but you always want to pay yourself back with interest at the market rates or above. Treat your family bank better than the other people's banks. Because right now, you guys, we are all treating other people's banks really, really well, to the point where they're super wealthy and we are not. But it's not because we don't have enough money flowing through our fingertips. It's because of our habits and what we're doing today. But we can shift that. That's the beauty in this message. We can shift it. And we can shift it when? Now, as soon as you decide to take action. The next one, the fourth principle, don't use third-party loans. You know, there is debt that is good debt as long as it's cash flowing. But watch that, because inflation, interest rates, this is why Nelson Nash started this, because at one point in the 70s, his real estate loans, I think, went from owing like 50,000 or 100,000 to like 500,000 overnight because of the change in rates. So you have to look at who's in control of the money. Remember, are the banks our friends? You guys know that. Finally, it's rethink your thinking. I love this one so much. I'll tell you a quick story. So the first banking system we opened up was on me. I waited 18 months or maybe almost 2 years before I funded it because I had a goal in mind. I said, I want to put this much in. I knew what the design was. I'm going to pull this much out on day one. So I pulled out like 84% that I put in on day one because I overfunded it. Remember the second way we could capitalize a system. And we paid off $76,000 in debt. Recaptured $2,200 a month. Average interest was probably somewhere around 12, 13% that we were, because we were paying ourselves back $2,200 a month. That money went into a segregated account, which is just a separate bank account. And the plan was to pay the loan right back. Like that was my plan. But as I looked at our whole financial picture, as I thought about it, as I prayed about it, I thought, wait a minute, I have $2.5 million of death benefit on my body. My wife has $500,000. Now, being the primary breadwinner, that financially makes sense, but having 5 times as much, what would happen if the most wonderful person in my life, my biggest support, was no longer here for my boys, for myself, for our family? And so I actually took that money and started her policy to make sure she had as much protection. That was rethinking my thinking because I wasn't there previously. But the more I looked at the problem I was solving for my family, I thought, okay, this makes sense. And I can give you another 10 stories about how you can rethink your thinking, and it's unlimited. Like their only limitation is your creativity. Now you got to put back the principles of being an honest banker because sometimes our creativity is a little too creative, if you get what I mean. So that's all for me. I'm going to jump into any questions, but so remember, the banks are not our friends. They're not there to help you out. They're there to give you maybe a glass of wine and some dumb suckers, and they want your money as often and consistently and persistently as they can have it because they're going to go make a lot of money and a good life off of it. I'm offering you, why don't we do the same together? You and me, the bank of you and me, right? Together, we can set that up. So Edward asked, do I set up a trust first or the LLC? Edward, most people I'm working with, no matter their earnings and their wealth, they're owning the policies personally. Even if it's through a business like corporate owned life insurance, it's going to be on someone's body. So you can easily own it personally, get approved. It's a pretty fast process doing it that way. And then if you want to transfer ownership to a trust later or something else, I don't know if your LLC necessarily wants to own the policy on you, but if you want to transfer that to a trust for control afterwards, like after you're no longer here, the way to do it would be just to make the change using policy services and using our implementation team. Any other questions from anyone else? You guys have been awesome. Thank you for your time. Thank you for giving me your most valuable resource, for coming here again, being in the 5%. Remember, only 5 out of 100 people find financial security. You guys are learning the values, the principles, and the step-by-step process on how to take back control of the banking function in your life. If you want to have a call with me, and have a one-on-one, get your questions answered, go ahead and book Jason at beyourownbanker.com. This is one of our top employees right here, this guy.
Hi.
So he's home today because of the hurricane. I think they should have had off tomorrow, not today, but that's okay. So super blessed for all of you to be here again today. I look forward to seeing you next week. We'll have more great information on the bank of you and me, privatizing your bank. And remember, the bank is not your friend. Use it for what you need it for, and that's it. So we went on a journey today. We went and talked about, are banks your friend? And we've established that no, they're not. We have hundreds of thousands, if not millions of dollars pass through our fingertips during our working lifetime. And we give up the control of that money because that is what we know. We assume all the risk, and it's costing us all our financial freedom. So today, I've shown you how the banks are indeed not your friends, how you can capitalize your system by paying yourself first. It's like putting your oxygen mask on first and loving yourself a little bit more. And we've talked about the values, the principles that Nelson taught us. We've talked about thinking long term. We've talked about capitalizing your system. We've talked about being an honest banker, about not taking on third-party debt for the things that you want in your life, and about rethinking our thinking. The last one may be the most important, to rethink our thinking. So, blessed to have you guys here. If you haven't already, go ahead and smash the like button, subscribe to the channel, and ring the bell because it might just turn blue to get alerted to new content. I'll see you in the next video right here. Check it out. Keep learning about infinite banking and the process of bringing back banking to the you and me level. Have a blessed one.